So topic of this year's NOAH conference is change. So I'm going to tell you a story about two guys that had the crazy vision of changing the banking industry 2.5 years ago, and while doing so, encountered a lot of success, but also walls, and kept changing over and over again. Personally, I think change is particularly interesting for the tech industry, because it's not only finding a product market fit, but even if you have a product market fit, or even if you have a market leading, dominating market share, it still means you have to change. There's been so many companies, all the Nokias and Fabs, etc. in the world, that at some point forgot to change. So you're going to hear the word change a couple of times over the next slides. So where change has led us to over the past 2.5 years is 190 professionals in Hamburg and 8 local offices across the world, growing by 80% per quarter, generating 35 million in revenue run rate. And by revenue, we mean net interest without any defaults, etc. And here's how we got there. So Alexander, my co-founder, who's a more techie and quant finance person, and myself both wrote our dissertations about how online data can be used to predict future events. After that, we kind of got dragged away from Rocket Internet into scaling proven business models across the globe. And then after that, we made the decision that we want to get the best out of two worlds. So we want to predict future events. At the same time, we don't want to do this academically, but actually earn some money with it. And so we looked at a lot of topics, and the one that caught our attention the most was the fact that 4 billion people on this planet do not have a credit score. And so our thinking was, if you look at the way how credit bureaus work, there's structural reasons why it's just not cost efficient to serve actually the majority of the world with credit products. So it's less of a problem in the UK and Germany, although you also have something in the double digits of unscored people, but even more so in countries like Brazil, India, etc. So our idea was, if we can use data that everybody of us generates in the form of social networks, e-commerce data, browsing history, locations, we all leave a lot of data in the internet that is used by performance advertisers, the NSA, some other people, but not credit bureaus and not banks. And our idea was, why don't we take data that is available for everybody on this planet and build a scoring that is not based on whether you paid your Zappos or your utility bills 3 years ago. And by doing so, this would allow banks not only to lower their default rates, but also to expand their custom targets, their target customer base in countries, but also in developed countries at the same time. And so our pitch was pretty much, we went to banks and told them, hey, we're gonna take your capital, your brand, your customers to come up with a better scoring system, and then we're gonna sell this to your competitors. So that pitch didn't work too well. First of all, because there's obvious reasons, but then also banks didn't see the need for this and said, like, okay, you guys are crazy. Why do you want to, how the hell are you going to figure out on Facebook data if somebody's credit worthy? And so we had to change. And by change, we mean that we had to take our own capital and actually, also start doing the balance sheet business simply in order to generate a track record that we can then show to the banks that this is actually working. Performance is always more powerful than ex-ante presentations or hypotheses. And so we kind of built around the lending product, which isn't too innovative. I mean, there's, that's not the exciting part, but I guess what was more exciting that it took us 19 days to build the platform, launch, and actually issue our first loans. And then we did something that nobody else has ever done before in the credit industry. We used no hypotheses. We simply said we're going to give out small amounts of money, short durations, and then we just looked for patterns in the 15,000 data points that we're getting in for each application, and simply look for what is the statistical patterns for people repaying, and what is the statistical patterns of people not repaying. And by doing so, you find all kinds of customer segments that you would never find if you start with a hypothesis-driven business. So if you say, I'm going to give money to all people with a regular income and that have been in the country for more than 2 years, you're never going to figure out if the guy that has just gotten into the country and doesn't have a permanent address would have been creditworthy. Our algorithm is only based on observation, and it's constantly learning and finding new patterns. At this point, it's actually so complex that even our data scientists couldn't tell you why a single application got rejected or or accepted simply because the chains of, of data points have become so complex. And this is what we then generated. We could actually show it's not just some, cool stuff and a cool phrase to put in a presentation, but it actually generates much higher margins than only using credit bureau data. And in fact, this is a back test we ran on all our applications, factoring in different customer acquisition costs, defaults, etc. And it's quite powerful to show the effect of alternative data. We then took this track record, went back to the banks. Now they were listening and actually willing to give this a shot and to implement this in their system. But then we realized another problem. Alexander and I have never seen a bank from the inside, but when we got the process docs and how this would flow into the banking backend, we realized that this is more complex and more outdated than we had ever thought of. So I'm not kidding, this would be like, okay, some guy prints out the 15,000 data points and then he takes it to another guy and he scans it again and then this goes to the central and then la la la. And we said actually, the lending operations that we have built up in the 19 days are actually more efficient than what the banks have built up in terms of online lending in the last 10, 15 years or so. And so here we had another change by switching our vision from becoming a big data credit bureau to actually building our in-house credit bureau within the bank, which certainly gives us a very powerful competitive advantage. Why? Because we can score customers that nobody else can score. So we're generating kind of sub-monopolies in the market because it's not fighting for basis points in giving out a credit card or an installment loan. It's literally giving the first credit to a guy in Peru or India or Brazil, etc. And then obviously that has a pretty powerful lock-in as we're expanding our products and can serve the customer throughout various products. So that's Kreditech today. We're live in 8 markets. We're offering 4 products to customers, and we're currently ramping up some markets. And in the vision of that is not only to grow in geographies, but build a one-stop shop for consumer finance, and that doesn't mean that we're going to offer different products to the same or different customers, but we're also going to expand our efficient usage of the data to, for instance, identifying needs before the customer even knows this. So if somebody posts on Facebook that he just graduated, and then he's looking for a real estate in London, and we see some data in his bank account, it might actually it's also a learning-based algorithm, but this would potentially lead to the conclusion that we say, okay, this guy has just graduated, why don't we send him a credit card even before he asked for one, and if he doesn't need it, he just sends it back. So there's a lot of things you can do with the data, which is not limited to scoring, but even for a customer, you can do a lot of interesting things with that. And then on the back-end side, we're expanding our automated processes from scoring and customer care and debt collection to pretty much the entire bank. So at this point, we already have allocation models that figure out what is the expected ROI from putting the next euro in Spain or Poland or this and that product, which would then determine acceptance rate and marketing spends, etc. And we're expanding this throughout the entire value chain of a bank. And that's another, hopefully big change to the banking industry. And that's it. Thank you very much.